Good day, all. Ira Epstein with your metals market wrap-up, and this is for, well, Thursday evening, but it's really Friday trade. It's Thursday evening, March 5th, 2020, just after 5:10 or so p.m., but we're already into the next day's trade. Remember, at 5 p.m. Central Time, the markets reopen in a number of the markets. The softs don't do it and the grains don't do it, but practically everything else does. So this is where the stock indices are. This is where your metals are right now. Your bond market's up another 13. The notes are sitting up 1/32 right now. And energies, they're caught. They're waiting to see, does OPEC make the cut? Is enough of a cut? And does Russia join in? It's a whole swath of events. I'll talk about it in the financial update. But the gold, this is the best settlement we've had in years. Very strong move. As you can see, I left this 1645 level, so you knew that was the prior high. This was last week where the market was. The market finished last week 1566.70. This week's not over, so I don't know where the settlement will be, but I've drawn a line up to it. It's not a resistance point, it's just a line so you can see it's at 1671.10, and this is a market that is running on one thing. It is fearful of U.S. interest rates continuing to fall. The reason they're falling in part is the COVID-19, the virus. The virus has got 400,000 more test kits that'll be out in people's hands this week. Doctors will be using them to test a lot of people. Next week will be another 1.5 million from what I understand. Every night we wake up from the previous day, every morning we wake up from the previous 24 hours, we keep hearing about more cases. You know, Italy's going into a lockdown status. The interesting news is I haven't heard anything about Spain. I did hear somebody died in the UK today. The good news is if it's being transparent and real, we're not hearing that much bad out of China anymore. I can tell you that according to the photos of the satellites going over, the smog is returning in China, so factories in some manner are reopening. And from what I'm hearing, they're getting back to normal. So that's not a bad thing. But how long did that disease run till its peak point? We're not at that point in America, so there's more time to go here. When we take a look at the chart, it's wild. You're caught between the 1694 level. You went right on down let's call it $125, $130, and you're right back up. That is a difficult market. It's giving no quarter. It's just moving in and back and forth in very fast manners. High risk, high volatility right now. When we take a look at the 18-day average of closes and looking back at it, it certainly did its job for 3 days in a row. You fell back, you churned at it, now you're surging forward. On the swing line, you've got a lower low, higher high pattern. That is not a trend. Where's the resistance in the market? The upper Bollinger Band, right up against that high that you were at now in that 1694 level. Where's the support? Back towards the 18-day average of closes. Where's momentum? Overbought. So I have a market that is in a wide swath of trading. That's the word I want to use. Hard to catch it either way. It's almost, you throw the dice and which way does the market extend in a large manner. That seems to be what it's doing. The gold-silver ratio still not favoring the silver. It's back up to a new all-time, for this move, high, if you will. I got to look what the all-time high is. You might even be there. In the silver market, you've trying to get over this high right here. Now, let's see if it's done it. That high was 1733.5. Today was 1746.5. So that changes it. These arrows should come off, and you should have an arrow pointing up here, an arrow pointing up here into the resistance. You're not in an uptrend. You are in the swing line, but you're under key averages. So those averages that have the resistance are 1767 to 1776.30. Those are the resistance points. Close over that, and you have a different game at hand. But right now, that is the resistance point. Copper market, churn, churn, churn. Just, again, within that band. It's going to break out one way or the other. I'm inclined to think that if China's in better shape and the factories are open, that it could be better for that reason. The other part of me is the U.S. is getting hit. What if we wake up and suddenly a city is closed down or something in the U.S.? What does that do for all of our demand? China's not the only user, but they use half the world's supply. It's so dangerous. You're scared right now, and that's what you see in the stock market is it's back and forth because of that. The platinum market. The platinum has still got the embedded reading. What rules the day? That. What else happened today? You had a bearish crossover where the 18-day average got underneath the 100. So these industrial metals, be it the copper, the silver, the platinum, they can struggle all they want. They're under still pressure to the downside. In the palladium market, you're fighting at the 18-day average of closes, that line in the sand to try to figure out what to do next. If this market starts sliding, why not the lower Bollinger Band? Now, let's assume that the market, for any reason, whatever it is, gets back over 2472 and closes over that tomorrow. You could end up then, remember, we had an outside day down, so this is what I always look at. You see that number? That's your 2472. That number should not be taken out within 2 trading sessions, it's my theory, of it being made. If it is, I look to see where the key averages are. Well, one average is here and you'd be over the 18. That puts back into play for me wherever that Bollinger Band is, that this was a trap for the bears in the market might want to pop to that number. Again, a difficult market, difficult times. Last, the dollar index, a vertical price decline. So the dollar is tumbling, as many analysts thought in December. You know, they were at first wrong, but it's tumbling for all the wrong reasons. It's tumbling because our interest rates are crumbling under us. Our market is scared about its economy. You got under 0.9 in the 10-year note today. Danger from the coronavirus. If you look at our economic data, it's not bad, but it's where the data is and what the virus might do to things that has the market more than on edge. This is a heck of a drop. You were just pushing the 100 level. You're back to 96.50. So low interest rates not helping the dollar. Now, I did a special report on the stock indices and the ETFs that represent them today. And I used one study. You know, normally I'll give you the swing lines, the monthly charts, the daily, the weeklies. Decided not to do that. Just daily charts using Fibonacci to show the bounce that we've had in stocks. And now the question is, does the market exceed those bounce highs or does it go back down for the lows it just made? I give you my ideas on it. I cover all the major stock indices and those ETFs. If you'd like to look at it, go to www.iraepstein.com under the word research. Enjoy it. I'm Ira. You have a good day.